Hey everyone, welcome to Flywheel Pod, your number one source for everything Frax, DeFi, and everything in between. And if you want to know what's going on in the world on chain, you've come to the right place. This is DeFi Dave, here with Capital K. We're here to help you harness the power of the flywheel. And this week we had on a legend in his own right, Must Stop Murad, who was a big figure back in crypto Twitter and in the Bitcoin maxi space from 2016, 2018. He was gone for a little bit, had a change of heart, and has come back better than ever, not as a trader, but as a builder as well, with his new platform, STFX. And I really enjoyed the conversation. We went so many different directions, guys. What did you guys think?
Man, it was very cerebral at points. I was like, damn, this guy's going deep philosophically. And then I also love how he kind of brings it back to, the framing of the battle between stables versus cryptos versus between the crypto infighting, between the stables infighting. It's very clear that we have a long march ahead of us, but he was hopeful, and that was good.
Yeah. Sam, what do you think?
Oh yeah, I had it. Sorry, I just get a little riled up with Bitcoiners. Gets my blood going. So, because I'm a stablecoin maxi, guys. That's why I'm here with Flywheel Pod and Frax. So, just had to jump in. I had to ask a few questions. But it's all good. I really like to see what Murad's building. His product looks awesome. Like it's really cool.
Yeah.
Wait, but none of us can use it because we're all Americans. So, if you're outside the United States, go check it out. It's really sweet.
Yeah, no, that's. I have a few friends that are ambassadors and that are close with the project and working on it, and they were telling me about it. I was like, "This is such like a crypto native product that it makes sense for something like this is going to be built." And I think Murad and the team that he's got together is the ultimate team to actually like get this product out to the masses. And so it's gonna be really exciting to see. Like right now they're in alpha testing, and like once it's out, like fully, and like you can do all different kinds of vaults and like follow all different kinds of traders. I'm sure it will become a meme in itself.
Yeah, I think the coolest thing about it. Yeah, I think the coolest thing about what he's building is it's just like a one-off thing, right? It's like take this one trade with me. It's not like you're asking them to like manage an entire portfolio or something. It's very light, it's very quick, and like you said, it's like when you're looking on the volatility and time spectrum, it should be in the right place, right? So for the person who's making the trade can choose the volatility and time period that they want and then go with that, which is perfect.
Yeah. And on that note, we can get this interview started. But before we do not forget to subscribe to us. Hit that bell button, leave a comment, let us know what you think. You can follow us on Twitter at FlywheelPod. You can join our Telegram at FlywheelPod, and you can follow me on Twitter at DeFi Dave 22.
You can follow me at 0x_K.
And I'm a traders_insight.
Let's get the flywheel spinning. All right, everyone, here we go with this Flywheel Pod with the one and only Must Stop Murad. Must Stop Murad is the founder of STFX. He is also a trader and OG that's been around since I remember when I first joined crypto Twitter. Like, you were one of my favorite go-to accounts. You always had such really such great insight, especially like at that time and during that cycle when there was definitely like a lot of noise and with all the ICOs and stuff. So really appreciate your voice of reason and light, and it's honestly an honor to have you on.
No, thank you so much for having me. I've been listening to a few of your guys' podcasts, and I'm a huge fan, so super happy to be here.
Awesome.
Murad, since I've been interested in your insights for a while, I'm just wondering, like, what are the biggest factors that inform your whole crypto worldview?
So I guess it's a mixture of things, and I suppose it has to start from outside of crypto. I think just like the internet has allowed us to communicate and publish and to consume information in a relatively free manner. So obviously, like, the internet itself has its little pockets and chokeholds of centralization, but as a whole, it's arguably the most decentralized system that the world has built thus far, right? And I think it's important that we do the same with money, and also with like other 12, 15 parts of finance as a whole, right? I think right now a lot of aspects, both of the monetary system as well as of the overall financial and credit system, are far too centralized. And somebody said something very interesting a few weeks back on Twitter. They said the moment the very first computer got connected to another computer, like back in the early 60s, essentially the separation of money and state was predestined, right? So it's just a matter of time, and we're like we're just in the middle of it unfolding, right? And so I'm just here for it, pretty much, and I really want to see it happen. I think it will be for the better for the world in a variety of ways.
What steps do you think will get us there to that separation of money and state? I guess it's already happening, but like, what steps do you see there, and like, what like obstacles and roadblocks do you see along the way?
So this might not be the most romantic response, but I think we simply need like more bull and bear cycles. Pretty much because, like, by definition, the peak of a bull is when like 85% of people first get into crypto. And the reason for that is because like a peak of a bull market, also like price and attention are pretty much the same thing, right? And so a peak of a bull market represents a peak in attention. There's only like so many eyeballs in the world. Multiply that by 24 hours. There's only so many kind of like news headlines we can consume per day, right? And peak of crypto bull markets is when crypto like squeezes in and pushes other stuff out, and you see it. And it's also associated with the emotions of like jealousy and drama and interest. Oh, like your cousin made like 30x in 2 weeks or whatever. And that's how people get in, right? And so we pretty much need more of these boom and bust cycles, because that's like, they're the pockets that get more and more people involved. And it's through these crazy boom and bust cycles that we grow.
Exactly. Like every cycle brings in a wave of new people. And like, you know, there's people that get in for the hype. There's people that get into different reasons. And when the wave recedes, there's always a few people that just stick around, and they kind of coalesce during the more difficult times. And like, that's what builds character. That's what builds, you know, like perseverance. That's what I'm trying to think of the other word. But yeah, it's just like you build up your strength during like the bear and the dark time. And when the next bull comes, you hopefully take your lessons from the previous bull and, you know, do well.
Yeah, for sure. And it's just like how there some startup models, they were possible in the zero interest rate or negative interest rate world, but they're not possible anymore in a 4% interest world, right? Similarly with crypto, more microeconomically speaking, like there's certain things that kind of work in a bull or as everything's going up, but essentially bear markets are needed to kind of clean up the industry and only leave stuff with sustainable unit economics, right?
Mm-hmm. Yeah. How do you think that interest rates like at 4% will affect, you know, the on-chain world?
So part of the reason why I think crypto exists is it's almost like an emergent, almost like a biological counter reaction to like the global financial crisis, right? And as well as the 15 years that followed after it, right? And I think as interest rates continue climbing for the foreseeable future, I think there will be less useless and just purely Ponzinomic type of projects in crypto. And I think it's for the better, because I think that like the real like DeFi and crypto blockchain projects overall that are going to change the world should be those that should be useful regardless of market conditions, rather than only those that work during super low interest rates, right? So it's probably for the better, in my opinion. I think artificially low interest rates create a lot of like perverted almost behavior in the financial markets, and like a higher interest rate is just simply more natural at the moment.
Yeah, I couldn't agree more. Especially like the past 15 years, you know, you had a lot of startups that they had the whole strategy for growth of growth, and that's just not going to work in this kind of new environment.
Yeah, I'm just thinking here, like, it's so funny that we talk about the separation of money and state, but yet we have this one individual who basically shows up every month and tells us what this interest rate is going to be, and that changes the way the money moves in the world. And like whenever I think about that, I'm like, it's so obvious that we need to decentralize this. Like, how can this one man, as he was talking through his meeting, the prices of things were just swinging based on like at the pure, whether it be a long pause or whether it was a comma, or it was just crazy to see that the power that one single person had on the markets. And
Yeah.
with that said, like, Murad, how do you envision us transitioning away from that? Like literally just more bull and bear, and people just start forgetting about the Fed? Like, I don't think so, right?
Yeah, so there's kind of a few schools of thought on this. Some people think that the transition can happen like gradually and peacefully. Some people think that it has to be like a sharp, violent thing. It's really difficult to say because pretty much like every monetary paradigm of one form or another in history ended in chaos or inflation or some kind of a societal collapse, right? And people talk about inflation, people talk about hyperinflation, people talk about the shifting of the monetary paradigm, etc. But whenever we study inflation, we always see it like the most famous examples, right? Zimbabwe, Weimar Republic during the 1920s, 1930s, Germany, etc. But the problem is that all of those were at like a national scale, right? And that's because that even in the 1930s, the world wasn't anywhere near as hyper-globalized as it is today. And as René Girard, the philosopher who wrote Things Hidden Since the Foundation of Man, famously said only just a few years ago, he said, in a hyper-globalized world, for complete destruction, all it takes is just a single match, right? And what he meant by that is the world has become super connected, but that doesn't mean that it's super anti-fragile. So if I do think we're gonna move away from the dollar in our lifetimes for sure. Whether that happens 10 years from now or 30 years from now, I don't know. But I don't think it's gonna be gradual. I do think that one of the crypto bull cycles that we end up having is gonna be like a lot sharper, positively sharper than the others. And it's gonna coincide with the end of like fiat currencies pretty much.
Yeah, Kit, what you were saying before about like the whole world just watches this one man give out the numbers and report. I bet you like when historians look back hundreds or thousands of years from now, they're going to view that as a religious ceremony. And like there's really like no difference. Like if you like look back to like ancient Greece and the oracles of Delphi giving their prophecies, like there's a lot of similarity in that and like how much meaning that has and how much meaning like, J-Pow giving out, the daily interest rate, like giving out like what they decided the daily interest rates to be. It's really funny to think about it from that kind of historical perspective and social perspective.
No, I was literally just thinking like if aliens are watching us, they might be like super confused as how like this is so abnormal, you know?
Yeah.
But
Yeah,
I
so
think like our children and our grandchildren, I think they're going to be even more digitally native than we are. And I think to them, fundamentally, they'll trust open source code and machines more than they trust humans. And it's a demographic and technological and a generational shift. So I think just like simply spiritually, our like grandkids, they'll think that everything that's open source and on-chain based is simply like cooler and more trustworthy. And I think like that's how the shift will happen as well. Like it's almost a spiritual thing.
yeah, and I guess I'll take a few more by like that time the cycles will go through, and like by that time like open source will be such a standard and life on chain will be such a standard, it would almost be expected. And if it's not like that, then it's just not going to fly with people.
Yeah, I'm trying to think through how that transition works because these things have to be taught to the next
And
generation, right? You see our kids kind of growing up with this technology, so we must be the one that teaches them that open source is good and is widely practiced in the industry. On chain is real, and that's what we all need to do. So there needs
true
to be
permissionlessness.
exactly.
Yeah. Right. Yeah.
But
What are you going to say,
I just
Kit?
want to ask a quick question for Murad. Like, I think we jumped right in, but would love to hear just a little bit about your background and what was your first foray into crypto.
Yeah, so I was actually doing a semester abroad in university, and I was just super lucky to be in the right place at the right time. That was late 2013, early 2014 in China. And that was right when the November 2013 bubble happened, when Bitcoin first jumped to like $1,000, $1,100, I believe. And since then, I've been following the space like a lot more closely, obviously. But it's been more so 2016 onwards that I've really jumped into the space. Originally, I am from Azerbaijan, went to school in the United States, studied Chinese and finance, and so I happened to be like in China at the time during like that bubble. Obviously, already had an interest in finance, so a couple of my friends were Americans who were like employees number 3 and number 4 at an exchange that's currently known as OKX, and back then it was like literally just 5 people, and they've kind of they've urged me to kind of pay more attention to the space. And yeah, I was just like super lucky to be like influenced by the right people early on.
Good friends.
Yeah, for sure.
Honestly, being around the right people early on and being around the right influences and in a way like being absorbed by that world and information is like so vital in order to get into it. Because you have people that like they might hear about it on the news, they might hear friends talk about it, but they're not in it. But if you have friends that are in it and that are like constantly telling you about it, constantly informing you about it, teaching you about it, it really makes a difference. Providing like a solid foundation. And then you get comfortable with crypto, and then you can just do your own thing.
I think like regardless of how like hyper capitalist or hyper individualistic you may be, it's important to be mature enough to understand that like luck and environment and serendipity, they definitely like play a role for sure.
Yeah, just having all the stars align with those people and timing. Like I got into it in 2017 because I was working at Everpedia, and we were just, we were like, oh, let's go from encyclopedia to blockchain encyclopedia. And I was just absorbed by it, hearing like people talk about it every day. If I didn't have that kind of, immersive learning environment, I'm not sure if I would have, been able to like learn as much or know as much as I do now.
I mean, if you actually think about it, all kinds of like opportunities in the world, as well as markets themselves and products and tokens and all of that, it's really just groups of people, right? And
yeah.
So it's really important, like the quality of the people in your life, it's literally make or break.
Yeah, you are the 5 people you surround yourself with the most.
For sure, for sure.
Yeah.
The other one that I like is, if you are the smartest person in the room, you're probably in the wrong room.
Yep, they really do go hand in hand. I was gonna ask, like, from like the 2016, 2018 cycle to like now the 2020 to 2022 cycle, how do the two cycles compare?
So one thing that I'm noticing is that crypto is becoming like a little bit more mainstream. And I think the NFT wave in particular over the past couple of years has really played a role, because I think that just like psychologically speaking, associating yourself with like a digital Pokemon card pretty much is a lot easier and straightforward and simpler than trying to understand the curve wars or just all this like triple, quadruple looping in DeFi and all that stuff, right? And so so NFT definitely brought a lot more people into crypto as a whole. Definitely got a lot more people to install MetaMasks and still have some ETH dust in their wallets and like try out stablecoins and stuff like that, right? Mm-hmm. So it's a good thing. But essentially, like I'm sure all of you guys saw like this curve of innovation, crossing the chasm type of thing. We're probably 1 or 2 cycles away from like crossing the chasm, right? And there is some kind of an innovation or some kind of a new sub part of the market or some kind of a new product that brings like more and more of the like the mainstream crowds in. Obviously, like kind of like the hipster in us wishes that it was still like 2012 Bitcoin or whatever, and just like 14 hardcore libertarians in the forums discussing and like being super early. But the reality is, with any of your favorite things in life, if it succeeds, it's going to be normified a little bit. That's just the reality of the situation, right? So there's no way around that. So yeah, I mean, I think it's a matter of infrastructure. So really, the people that are actually building the infrastructure, making the wallets easier to use, making the platforms easier to use, etc. They are the ones that are probably pushing the space forward, like most notably, because as one bear market turns into like another bear market in between those, they are the ones that make like the actual regular retail person. They make their user experience easier, right? And so that's like the key to like the movement from the fiat bubble to the crypto bubble, so to speak. But yeah. I would say, like, to answer your question, 2014, 2015, 2016, it was still like more niche. And like, I remember a period when it was literally just like only 8 or 9 altcoins. And it was still like kind of like Silk Road, dark markets, like libertarian crowds, right? And as it opened up, it's like it's like less niche, more wider, but like you can't have the market caps going up without this happening. So it's just part and parcel of growth.
Yeah, no, for sure. And I agree with you. I think like in terms of getting more people into crypto, and like at the beginning of the funnel, like for this cycle is NFTs, I can definitely see the next cycle being wallets and infrastructure, and it's just being like easier for people to interact with the world on chain. If there's one thing that crypto could improve on a lot, it's definitely like the wallets and the front-facing part of crypto.
For sure.
Yeah. Do you think there's like a dilution of values, right? Like, decentralization, permissionless, and as you see like all these other alt L1s kind of spin up with their trade-off in decentralization for performance. Do you feel like as we go more mainstream, this dilution is inevitable and is actually needed to bring on the mass adoption?
I honestly am starting to think that the whole like L1 thesis is reaching its end. There's only so many trade-offs and differentiations that you can have. I think people are simply trying to recreate something like an Ethereum or a mini Solana. VCs simply know that like the smart contract platform that ends up succeeding, their native token is likely to become like money-like, so to speak, and that's like the biggest total addressable markets in crypto. And so, yeah, I mean, that's why everybody always invests in L1s, and people like pray and spray into those kinds of platforms. But I think like we are about to reach the stage where I honestly don't even know whether the world really needs more than 5 or 6 L1s, and even that might be too many. I think it's going to start getting consolidated. And yeah. I kind of hope that this Aptos and Sui and these other ones that are coming up are kind of go nowhere, so that people just stop piling $400-500 million into these things, because it's pretty much like starting to be useless. We need to be working on like L2s, L3s, app chains, and actual like DeFi use cases rather than just another L1. It's kind of getting tired. And also because like whenever you make a trade-off in the direction of speed, you might start building dApps which can have like 100,000 transactions per second or whatever. But that's the token of that system, that's not going to be good money. And I think that like the tech side of the investors and the Silicon Valley, they don't understand, like, as much as I love some of the DeFi projects that are built on Solana and some of these other systems, and we're probably going to deploy on every chain in our own app as well, I honestly don't think like Sol or some of these other coins just simply make good money, And that's just kind of like what I think about it.
Can you go into that more? Like, why don't you think it makes good money? Because of the trade-offs that it makes?
Yeah, I mean, in order to be... So we need to understand that blockchains are... they're simultaneously money and payment systems, and in many of these cases, smart contract or dApp systems, right? And as you make trade-offs in favor of one of these functionalities rather than the other, it makes like the money part worse. So Bitcoin went like super hardcore into the money part, and a lot of like the early Bitcoin believers, they believe that like optimizing for the gold-like store of value, like functionality, quote unquote, is more important than having dApps on chain. And probably some of like the Bitcoiners will hate me for saying this, but again, I will repeat myself. We need to understand that these are not just like money, like a gold bar. The value of the gold does not depend on the amount that it gets traded per day. But blockchains, their security systems are built in a way where it's a money and a payment network simultaneously. And for the payment network to work, you need the money to be worth something. And for the money part to work, you need the payment network to like be high volume and robust, right? And if one of them fails, the other one starts to fail. And obviously everybody has been talking about Bitcoin having the problem of low fees, right? Like there's literally like 5 dApps on or there's a couple of dApps on Arbitrum right now that make more in fees than Bitcoin does, and that's a problem, right? And so because of that, there's only 2 ways out of this. Either Bitcoin will somehow find a way to have sustainable transaction fee revenue without adding inflation, or it will have to add some kind of a small inflation, right? And if you add a small inflation, you're kind of going against the Bitcoin religion of having purely set, even if deflationary supply, right? It's kind of like that mythos, that whole spiritual idea that it was built upon. And obviously goes without saying that the reason why the transaction fee revenue hasn't become super robust on Bitcoin is because all of the what they call degenerate use cases actually ended up happening on Ethereum, Solana, and a bunch of other chains. And so casinos, NFTs, all of DeFi, DAOs, gambling, leverage trading. You can say that all of these in isolation are stupid, but when you bundle all of them together, it ends up being like hundreds of millions of dollars of total revenue. And it's something, right? You may hate it or love it. It may not align with your ideas of purity or whatever, but there is demand for these services. And because they don't happen on BTC, it creates like it's gonna be a problem, right? And so essentially, the existence of Ethereum L2, Solana, and these other chains kind of represents almost like an existential crisis for some of these other coins, so to speak.
Yeah, I couldn't agree more. I was going to ask you, what do you think of Ethereum's transition from proof of work to proof of stake? Like, how does it change the nature of Ethereum? Does it make it more like money? Does it make it more valuable? Like, what do you think?
I'm not so religious about proof of work. I think a future store of value could work as a proof of stake system, to be honest.
Mm-hmm. And I mean, like,
and obviously, like, and this has nothing to do with my views on the environment at all. I don't think that Bitcoin utilizing a lot of energy is bad for the environment. I mean, I think that the more energy that Bitcoin consumes, the better, because as human civilization grows and as the human economy has grown, we have been consuming more and more energy as a whole every decade. And that's just going to continue in perpetuity. And there's absolutely like nothing wrong with that. In fact, from an environmental perspective, large-scale proof-of-work mining like increases energy efficiencies, and it actually incentivizes the production of alternative and sustainable like energy generation. But so like whether I like or hate proof of stake, that has nothing to do with the environmental concerns. I just think that it can work just as well as proof of work. Now, there is an argument to be made that it is, in terms of like the ownership of the original coins and the health of their flow through the system, there is an argument to be made that proof of work is a little bit more of an egalitarian or a bit of it more of a fair model, because the miners constantly have to spend the coins and kind of get them back into circulation in one way or another. While in the proof of stake systems, essentially the people who have been large Ethereum stakeholders since early days pretty much continue having that advantage in perpetuity. But I was never the kind of person who to ever care about equality really of any kind. So once, just like the environment stuff, that's not really like a detraction for me. And yeah, I honestly think that both, essentially, I think both proof of stake and proof of work can work well.
And how do you think, what do you think of this new, what do you think of Ethereum now as proof of stake? How does it, like, not, comparing really proof of work to proof of stake, but like, how do you think like the new Ethereum with proof of stake like how is it as money? I guess actually you already answered. Never mind. Yeah.
Yeah. No, that's a great question. So like early on in the BTC debates, it was super. The biggest debate in Bitcoin history was whether we need to promote the store of value aspect more or the medium of exchange aspect more, right? And every monetary economist will tell you that they're like both of them matter and they play off into each other, and it's almost like synergistic and a feedback loop, and you need to kind of bring both together. But and by the way, I'm gonna say all of the following as somebody who's like 85% of portfolio is still in BTC. Just because like I like sleep at night better with most of it being there for now. But what I will say is a lot of like the Bitcoin proponents, especially during the 2017 wars, they believe that the store of value, like essentially like making it more gold-like, that aspect is more important because the idea is first you need to make it valuable, and spending it is kind of stupid. Why would you spend Bitcoin, which is going to become this like super precious gold, for Starbucks? It doesn't make any sense. And in full transparency, I was the one who had this view myself for like 3 or 4 years, right? And then there were people who believed that it's important, like the way for it to grow is to kind of almost force people to accept it in commerce, and kind of spend and replace is better because it incentivizes the construction of infrastructure, like ATMs, payment machines, all of these like merchants that kind of you can pay in BTC or ETH and it instantly gets converted to stable coins if you don't like crypto or whatever, blah, 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 right? And so those have been the two schools of thought, right? Now, the reality is obviously somewhere in between, but I think Ethereum is kind of indirectly proved that the second model and the second philosophy has legs, because Bitcoin's power is that it is like the most robust, it is the one that's less unwilling to change, and it is the most conservative, it is the most deliberately slow moving, etc. Right? And there are certain advantages of that, and the advantage of that is anxiety reduction, and as a store of value, like anxiety reduction from first principles is super important. Ethereum, on the other hand, took the other approach where, because of all these use cases that I mentioned, like gambling, NFTs, DAOs, DeFi obviously being the biggest one, it almost like Ethereum forced itself as like the payment currency for a lot of these things, and that's how it grew, right? And so it forced itself as a payment currency, but whether you like it or not, like people buy, let's say 100 ETH or 10 ETH, and then they end up like playing around with 5 or 6 of them, but 3 or 4 of them end up just like staying in their wallets. But that aspect also is how Bitcoin becomes store of value as well, right? So it's essentially like two strategies for growth, and Ethereum is kind of like proving the power of the second one. So like that's kind of like the philosophical battle, right?
Yeah, that's a great way of looking at it. Just like two different philosophies, like one store of value prioritize, the other is medium of exchange prioritize. But would you also argue that with this whole ultrasound money meme, EIP 1559? It's making it, even like more store of value because it's actually like becoming like attempting to become deflationary.
Yeah, I believe that with the burning of some of the fees, obviously, it has the potential to become not just disinflationary, but outright deflationary, right? Mm-hmm. And that can have a positive momentum to the token. It's very difficult to say that whether like slight deflation, disinflation, or deflation is best. I definitely don't believe it's slight inflation. I believe for the past 30 years, the governments have been controlling the economic departments in the biggest academic institutions. And so like we need 2 or 3% inflation. I think that's a scam. So it's either disinflation or I think it's a scam to perpetuate like central banking and the fiat currency system, right? And I believe it's either disinflation or deflation that's best. Which one of the two is better? I don't know. Bitcoiners argue that the thing about Ethereum is that they've kind of been changing the monetary policy a little bit more willy-nilly every 3-4 years, right? and it's like less set in stone for the next 140 years, which is an argument that has legs. But also, like we said, on the Bitcoin side, we still don't know 100% whether not ever adding inflation will be sustainable. I really hope it is, but we'll see. So yes, Ethereum technically could become even more deflationary than BTC. For the longest time, I thought that when it comes to crypto, people, both BTC and ETH, right? People used to say that, it's no inflation, uncensorability of transactions, and unseizability of your wealth, right? People used to always have these like 3 selling points as like the biggest, and then people used to debate which of those is the most important. I kind of thought that no inflation was like the coolest thing, but I realized that it may be my like first world privilege speaking, and 2, most people don't really care about whether it's like slight inflation or slight disinflation, because most of the people's like brain, it's like too short term thinking in order to really care about these like multi-generational like effects in stuff, right? So really it's unseizability and uncensorability that will prove to be more important in times of chaos for sure. I mean, you're already seeing a lot of people deplatformed and people not being able to conduct business, etc. So crypto comes in very handy there. But again, I'm returning to this point for the 4th time. It seems to me that the currency of dApps, even though one dApp in itself can be like small, when you get 1,000 different dApps or blockchain-based use cases together, it becomes a whole new digital economy, right? And I think that the currency that becomes the de facto currency there, that's the currency that wins, right? And so comparing ETH to BTC, ETH has obviously made more forays or more progress in that sense. But we need to also remember that ETH and BTC are also fighting against stablecoins. And really, stablecoins is just dollar on the internet. Really, that's what it is, right? And Jeremy Allaire, just a couple of days ago, he said the nature of the world is such that CBDC, it might not be like this whole new thing that governments will impose, but what they're much more likely to do is they're much more likely to take USDC and then kind of adopt it as this hybrid corporate governmental thing, right? Simply because USDC is so much more far ahead in being embedded in these systems, right? So that's kind of like where we are.
Yeah. Where do you see Frax?
Hold on a second. I just want to ask a question why do you say that stable coins are in opposition, right? Because one thing that is well known in crypto markets is that a lot is driven by leverage and debt, right? Like if you look at the leverage levels for crypto, it goes up when we're in a bull market and it comes down when we're in a bear market, right? And, I have this view where, the higher the Bitcoin goes, the higher the Ethereum goes, the more I can borrow against it. And I don't want to borrow ETH. I don't want to borrow BTC. I want to borrow in dollars because, for one thing, I know that inflation is 2% a year or 4% a year, whatever it is right now. And if I do take that loan, it's going to get cheaper over time. Why would I want to borrow? Like borrowing Bitcoin is probably the worst thing that you can do, right? Because it's a 100% volatility asset that may double, right? Like you borrow one BTC, all of a sudden it goes from $20,000 to $40,000. You're screwed because now the collateral that you've borrowed, you've got to pay back in BTC. It's a terrible asset to borrow. So I think it's really short-sighted to say that like the dollar is going to go away. I don't think it would, because from a debt standpoint, it's the best thing that you can have. I wouldn't want to take any debt and anything else, right? I mean, maybe some like non-US based currency like the euro or something else, but that's all relative, right? When we talk about fiat currencies, I mean, they're all debt-based instruments, right? They're not collateral, right? And so I think it's a different conversation to be had, right? And so the dollar works really well because it's the best debt-based asset, not because it's the best collateral-based asset.
Yeah, so I definitely agree. As a borrower, you are always incentivized to borrow the currency that you think is going to depreciate in value, right? I think the bigger driver of prices and market caps in crypto assets isn't the credit markets. I still think that the size of the credit markets in crypto overall are still like a drop in the ocean.
Very small
compared to the 200, 300 trillion or more that exists in like TradFi credit, right? And I think the bigger drivers for now still is what assets people choose as like a store of value investment, right? Instead of real estate, instead of art, instead of stocks, like which coins replace those, right? And it's Bitcoin, ETH, and stable coins, maybe a couple of other alts, right? Like these are like the biggest competitors right now. And ultimately, there's multiple wars going on at the same time. There's wars between BTC and ETH. There's wars between ETH and like ETH copycats. There's wars between like BTC and ETH together on one side and stable coins on the other side. And then there's wars among the stable coins, right? But I think for simplicity's sake, we should consider stable coins the same as fiat because technically they are. And the most interesting battle among these in my mind is, so I think like BTC and ETH market caps will continue to grow, as well as the stablecoins market cap will continue to grow. And the ultimate battle will be between the two, right? The ultimate battle will actually be between the volatile cryptos and the stablecoin cryptos. And ultimately, I believe that the volatile cryptos will win.
You think the volatile cryptos will win?
I just don't understand, right? Because if I buy Bitcoin at 20,000 and it goes to 100,000, I now have probably up to $60,000 or $70,000 worth of credit that I can borrow against that BTC, right? And however much credit that I take is dependent, but I'm going to be borrowing in dollars, right? I'm not going to be borrowing in ETH or something else.
No, yes, you are going to be borrowing in dollars while dollars exist. But what are you going to be borrowing?
But why would they go away? I'm just wondering where you're getting this idea where a debt-based instrument that allows me to have like a non-volatile debt-based instrument which doesn't have 100% volatility, why would I want to borrow in anything else, right? Because if you look at how the dollar goes, I mean, so I know you guys were talking about like Treasury and the Fed and stuff earlier, but like most dollar creation occurs outside the United States, right? The U.S. doesn't have much insight into most of the dollar creation, right? Because when an Argentinian bank lends to like a Chinese bank or a Chinese bank lends to an Argentinian bank and they're doing it in dollars, those dollars are not on the Fed's balance sheet or like they're not a part of the Fed's equation, right? So there's so much dollar creation that happens outside of the scope of the Fed. So whatever they make the interbank lending rates at, that's really like a drop in the pond, right? The bond market is so big and so deep that like the Fed doesn't really affect these things. They try to just they're like a small sailboat in the giant wave of the bond market, trying to like make it go one way or the other. But it just I don't see why we would move away from this debt-based instrument to like a fully collateral-based instrument. And if you want to tell me, or if you have ideas about how that would happen, I would be really interested, because currently like we fund everything on debt, right? When you buy a house, you buy it on debt. When you buy a car, you buy it on debt. When companies go out and like build stuff, they're doing it with bonds and they're raising debt, right? Everything's a debt-based system. So like where is the incentivization to move away from that debt-based system into something that you're saying is more like collateral-based?
Yeah. So before cryptocurrencies were ever created, we lived in a world of fiat money only. Let's say, for simplicity's sake, we lived in a dollarized world, right? Right now, we live in a world where both crypto, like volatile crypto assets, and dollars still coexist together. But I think it's extremely naive to think that this hybrid world where both crypto assets and fiat money exist simultaneously, the idea that will happen forever, I don't think that's very realistic. And I think one has to destroy the other. And in my opinion, volatile crypto assets are going to destroy fiat currencies because for a very simple reason. Fiat currencies are inflationary, right? So whatever percentage of your wealth that you're storing in them, every year it depreciates in value. Now, crypto assets such as Bitcoin and ETH, on the other hand, in the long term, like if you look at the last 10 years, it's been the opposite. Because they are not creating new units, but in some cases actually destroying units, what's going to happen when you extrapolate into the future is that the unit of one priced in the unit of the other, so the unit of a cryptocurrency priced in the unit of an inflationary dollar, it will keep on growing literally forever, right? Of course, the rate of growth will slow down, but I believe it will keep on growing forever up until it's literally like two bowls. And each of these boom and bust cycles that we have, you have some of the water from one going into the water from the other. And the BTC and Ethereum buckets are still super small. They're super small. And I still think we're going to have 3, 4, 5 of these boom and bust cycles, after which it's gonna grow, right? So even though it looks like this, like if you kind of smooth it over, it's steady growth, really what it is. Mm-hmm. And there will come a time where I believe the fiat system breaks down completely. And I think that whether it's Bitcoin or whether it's Ethereum that's going to be the dominant money of the future, the debt of the future is going to be denominated in that currency. Now, our minds, when we think about lending and credit, we think about them in the context of today's central banking, fractional reserve, euro dollar, money bank-to-bank lending, money creation ways, right? But that is not the only financial system that can exist. That's simply the one that we have been taught from birth. That's like the status quo. Now, obviously, the system will have to change and adapt if in a hyper Bitcoinized or a hyper etherized world. There will no doubt be less credit and less debt, and it will be a more equity-based system. Whether that's better or worse for society or for economic growth, I don't know. There's Keynesians who believe it's going to be worse because it's going to be less credit and credit drives society. There is Austrians who believe it's actually going to be better because it's the credit systems that create the hyper volatility of booms and busts. And actually, instead of the crazy booms and busts, we're going to have steady growth instead, which is actually better for the human psyche because it allows for you to focus on 12-year-long projects as opposed to 12-week-long projects, right? So there's pros and cons of both, but ultimately it doesn't matter what's better for society because that's the socialist way of thinking. What matters is how will decentralized markets choose their next money? And I believe they'll choose the deflationary ones over the inflationary ones. So the dollar credit system will destroy itself.
But Murad, let me ask you one more. Let me ask you one more question, and I can give it back to you, Dave. I know the general argument you're making. You're saying that at some point, Bitcoin, Ethereum, whatever, is going to stop being a 100% volatility asset and become a much less volatile asset. And I don't really believe that because the numbers say differently, right? Bitcoin's remained as volatile as it has been from the beginning, right? It's still just as volatile today as it was 12 years ago when it was launched, right? There's literally no. Okay, so the only decrease in Bitcoin's volatility has happened at like the extremes. But if you look at the median volatility, it's been flat for over a decade now. So there's all these like things that, Bitcoin's going to be used by everybody and eventually it's going to become less volatile. What if that never happens? What if it stays 100% volatile asset? That's not really something, again, it's coming back to like debt markets. And you're making this argument, which I don't really find, which I don't really accept, right? That somehow a volatile asset, which has 100% volatility plus, right, is somehow going to be accepted as the primary currency for debt markets. It just doesn't make sense because there's too much uncertainty for both the lenders and also for the borrowers, right? Because let's say I'm lending Bitcoin, right? When I lend that Bitcoin out, I'm now short. I'm short Bitcoin to the borrower, right? So if the price of Bitcoin declines by 50%, which it does all the time, right? It does all the time. I'm out of a lot of money, right? The person who borrowed that money can pay that back, and I'm actually losing money there, right? And same thing for you. I mean, Murad, like if you're going to buy a house today, and somebody offered to give you a loan in Bitcoin and said, okay, I'll give you a 25 BTC loan for 30 years, right? Like you would never take that because you don't know what the price of BTC is going to be in 30 years. It could be higher, it could be lower, but it's probably not going to be where it's at today. When you look at something like the dollar, right, which again is the primary use case for the dollar, it's all debt-based, right? Everything is debt-based. There is no non-debt dollars, right? Everything is a liability on someone's balance sheet. Both the central banks, both the treasury, everything about the dollar in the banks, it's always a liability. So like I don't think that you're making a solid argument when it comes to saying that somehow this hyper volatile instrument is somehow going to become the next debt-based instrument. Because if again, coming back to the house problem, you would never take that 25 BTC loan ever, because you would, unless you're hedging it, and then you're taking out the volatility, and then essentially you want to just take a dollar-based loan, right? So
I very, very strongly disagree with you. Very strongly disagree with you. And the reasons are the following. So there have been many quantitative reports analyzing, comparing Bitcoin's volatility. I personally believe it has become less volatile than it was to be. It grows less in bull markets, and it decreases less in bear markets. And it's just going to continue happening. Now, also, but even beyond that, you and I have been tracking Bitcoin markets for like less than a decade, right? And I think with the topics that we're discussing, you need to not think in years, you need to think in centuries almost. And there is absolutely no doubt in my mind that 50, 60 years from now, Bitcoin and Ethereum will be significantly less volatile than they are today. It's just mathematics, because something that like an asset whose full diluted market cap is 10 trillion, whether you like it or not, it's going to be less volatile than something that's a penny stock that's 10 million. That's just how liquidity works. And even at 10 trillion, it might not yet be the currency that underwrites the debt, as you're saying. But eventually it will be that currency. Look, Bitcoin can keep growing while dollar or some kind of a stable coin or some kind of a quasi-stable instrument can continue existing. That quasi-stable thing can even be a tokenized long or short position of a cryptocurrency. It can be many different things. But I think eventually, in the super far long term, I'm literally talking about like sci-fi far future, it will only be one currency in the world that is still super volatile today. But in the future, it will not be. And that will be the currency that literally runs the entire economy. We may be thinking on different time frames. Maybe 20 years from now, I think you're still going to be correct. But I think 70, 80 years from now, that's when my argument starts getting a lot stronger. Look, it's impossible for the dollar to survive, because I think it might not seem to you right now, but I think the mere existence of Bitcoin and Ethereum, it almost presents an existential danger to fiat currencies. Because with each of these boom and busts, and even if I'm too optimistic and it takes 10 or more boom and bust cycles, people will get more educated to the fact that this money-like asset is inflationary while this other money-like asset is deflationary. And today, dollar might be worth 100 trillion in today's dollars. But I think it's going to get smaller and weaker. That's what I believe in. I think since 2016, the world is deglobalizing, and I think, yes, we might have spikes in the dollar index in the medium term before the entire fiat currency system will go to shit. But eventually, I do think the fiat currency, what we saw in Weimar Republic, it will happen on a global scale. And after that happens, it's not going to be the dollars or the fiat currencies that are going to be underwriting debt. It's going to be something else.
Wait, you said in 2016 the world has been deglobalizing since. Can you explain that point a little bit more? So you think the world is becoming less connected?
In some ways, yes, it is. The fact that the world has kind of been deglobalizing since 2015, 2016 is a popular idea. It's kind of a cliche right now. But essentially, Brexit, some of the import-export wars that we've seen with China, obviously the war in Ukraine, companies leaving Russia, Russian companies leaving other countries, etc., etc. All of these things, I think, are cracks in the kind of like, you could say, a globalizing neoliberal order that we've seen since 1960s up until 2010s, right? And we are probably going to enter a multipolar world for the next 3 or 4 decades, which is going to be a little bit different. And I personally, I think it's very interesting how crypto plays a role in that. And it's, if fiat currencies go away, it's interesting to think which of the countries will benefit and lose more from that, right?
Yeah. In this multipolar world, who are the players you see? Balaji says like in the multipolar world, it would be like the U.S. circle of influence, the Chinese circle of influence, and also like the sovereign crypto circle of influence. That's kind of like the new third way. Do you agree with that? Do you think there's other big parties at play at the table?
I think it's going to be NATO versus China pretty much.
Okay.
And there will be extremely wealthy crypto holders on both sides.
Yeah, I agree with that. And we were talking about stablecoins before, and obviously this is a Frax podcast, so I definitely want to get into your thoughts about Frax. I saw you're in a few Frax groups. How long have you been following Frax for? Like, what do you like about Frax, and where do you see Frax fitting in the crypto in the future?
Yeah, I've been kind of following Sam Kazemian's work ever since Everypedia. I had a bunch of friends. I had a bunch of friends in the EOS community, like overall, like just been kind of like, wouldn't say early to Steam, but kind of been following EOS in general and a bunch of those dApps, like early in the day. People joke that EOS was like the Solana of the past, right?
Yeah.
And so I really like, obviously, like anything I say on Frax isn't going to be anywhere near as insightful as your guys' knowledge on the project. Mm-hmm. But what I like is Andrew Kang's, and I believe that was just him paraphrasing Sam Kazemian himself. I really like the late 2021 thesis of how the winners of the the DeFi wars in general are going to be projects that are simultaneously most likely to have a stable coin of their own, kind of an AAM or a swap platform of their own, and I believe a lending platform of their own. And it's like that holy trinity, kind of the long-term vision, right? And I think that given what Frax has done, it's probably like one of the 3 or 4 projects that's like in the running or has made the most progress towards containing that holy trinity in one decentralized autonomous organization. And that's like the core, that's like in a few sentences, that's the core reason why I'm bullish on it. Also, generally, like more from a price or TA perspective, it obviously took a giant hit after the whole Terra collapse. I think like it was very attractive in the summer and probably even right now at these prices relative to like the long-term vision. Obviously, counter to that are some of the like the regulatory risks and like the whole American nature of the project. Obviously, founders being in America is not a positive in DeFi, but the DYDX and Uniswap guys somehow make it work. So there is always hope. These are kind of like my thoughts on Frax and why I like it.
So you've been following Sam since the Everpedia days.
Yeah.
Well, wow. So that's really cool. That's funny. Because like I was at Everpedia. I was one of the first employees at Everpedia, and I remember following you there. And so like very, I guess serendipitous.
Yeah. For sure.
Go ahead.
I want to jump in real quick here. So Murad, can you share a little bit about like this new project that you're working on, STFX, right? Like what kind of brought you about to it, and share with the audience like what STFX is in the first place?
Yeah, so it's kind of at the intersection of like 2 spaces or 2 trends in crypto. So first of all, decentralized asset management, pretty much like on-chain funds. You can separate them into passive or active. I'm going to be focusing on active kind of for the next several sentences. But people have been trying to build on-chain funds since 2016 with Enzyme on Ethereum. And there have been like 15 attempts as a whole across like 5 or 6 different chains since. But the TVL of all the actively managed decentralized asset management protocols right now is like 60 million, which in the grand scheme of DeFi is not that much, in my opinion. And there's many reasons for this. I'm not going to go into all like 12 of them right now. I actually wrote a Medium article like listing a bunch of them. But essentially, there's like a mismatch in crypto between the demographic that is like the DeFi participants and like the type of use cases and the projects, right? And we kind of like one famous example is like fixed term lending or fixed yields, right? People like the entrepreneurs or the builders' logic in 2020 and 2021 was it's a $100 trillion industry in TradFi. Let's put it on the blockchain, and if we capture even like 0.01% of that, we're gonna be rich, right? But the reason it doesn't work is because like the current DeFi like power users, they are people who are relatively impatient, risk seeking, volatility seeking, kind of like DIY, kind of like to do things themselves, etc. Right? So there's that mismatch. Now I do think that eventually fixed yield rating is going to consume all of DeFi. I believe that DeFi is going to take over all of finance, right? But right, we have to think a little bit short, medium term here. And so instead of having on-chain funds which last months or years, we are building these new vehicles. We call them single trade funds or single trade vaults. Essentially, you can think of them as on-chain funds that are literally dedicated to one trade at a time. So we think that pretty much like social trading, copy trading, it already happens in crypto. It's probably one of the biggest use cases of crypto. It happens, but it happens like all over the place, right? It happens on Twitter, Telegram, private Discord chats, etc. Right? We're trying to kind of put them all in one place. And the second kind of category, the second thing, as I'm sure you guys know, there's been kind of like vaults have been very popular in DeFi, like 2021 onwards. DeFi, you could argue, is kind of undergoing a vaultification of everything. A little bit less so right now in the bear market, but I believe it will kind of continue again. And as I'm sure you guys know, we've seen many different kinds of vaults, kind of like yield farming vaults, liquidity management vaults, most famously options vaults, right? Like Ribbon, Friction, Katana, etc. They've popularized these like relatively vanilla option strategies, packaged it into like one-click investments, right? And obviously there's like a smaller niche of like exotics and structured products. Also, they package into these vaults. The idea of vaults is you take these somewhat tedious or complex to execute strategies and you kind of turn the whole UX into one click for a retail investor, right? Now, most of the vaults thus far have been focused on yield generation. We are obviously building a much more aggressive type of vault, which is kind of like a vault dedicated to a trade. So you can either win a lot or lose a lot. And we think that there's going to be, our thesis is there's going to be more and more of these like aggressive vaults, kind of directional vaults, you can say. And essentially, if you draw an axis between duration on the x-axis and volatility in the y-axis, we're trying to occupy the top left corner, which is these vaults that are like kind of like super short term, but are also very volatile. And we believe that psychologically speaking, they're actually much more likely to find product market fit than a lot of these other vaults in crypto, because leverage trading is already the number one use case of crypto as a whole, and I believe will continue to be for the next 10 years. And second of all, like I said, it's better aligns with the demographic of DeFi power users. And so our goal is essentially we are going to be building on top of the various decentralized exchanges and decentralized derivative exchanges. We started off with GMX on Arbitrum, but very soon we're going to be deploying on Optimism, hopefully Ethereum Layer 1, Avalanche, maybe even non-EVM chains like Solana. So we're completely agnostic to the chains or the dApps. We want to be on top of everything. So our core competency, we're trying to build what we call a new category in DeFi. We call it SocialFi. Essentially, we're trying to combine like social, like rankings, achievement boards, leaderboards, and kind of crowdfunding and investment together, management together, with the more famous like DeFi building blocks, such as options, futures, perpetuals. We're trying to build like a whole system based on that. And we just reached over 2,000 users after only 3 weeks of like alpha mainnet, right? Instead of doing a test net, we went straight on mainnet But what we did instead is we limited the vault capacities to 200 USDC. Our audit is beginning next week, right? As more and more of our repos get audited, we're going to be slowly raising the capacity. And so we see no reason why we can't be running 400,000, 500,000 trade vaults. And so, yeah, pretty much you can think of them as trade vaults. So that's what we're building. Yeah.
Very cool. So it's like winning with your friends, or like you have some, I've been talking to Peach about this. One thing he like said to me earlier was having the hop ball alpha. There's like someone who might like have the right insight or like the right alpha at like the right time. And like with your platform, they can just like create a vault and then say, hey guys, I have this strategy, I have this insight. And then people can like join in and they can aggregate that position, because that copy trading already happens, but in like basically off chain, and people just copy each other. This is a way to copy trade on chain in a sense.
Exactly. And we're trying to, so even myself, right? I sometimes see a trader I really respect post a trading view chart or some kind of a thesis or a thread, and then I go and execute that process myself on like a centralized exchange or on GMX or somewhere, right? And we're trying to take that process and like literally turn it into one click.
Very cool.
I mean,
so like the best way,
mm-hmm.
So the last thing I'll say is like the easiest way to think about it is essentially it's a Kickstarter for trading ideas.
I like that pitch.
Yeah, that's a clean pitch. And I mean, you literally created like nonsense exists because people want to be able to track wallets and set alerts, but that is just a means to an end. The end is to execute whatever this smart wallet was doing, right? So I feel like you just bypass nonsense completely and be like, forget about all this analytics. You could just APR easier with one click, right?
Exactly.
So, now, my question is, what does the fees look like for both the, what goes to the DAO and also what the manager gets to keep? And how do you make sure that the managers don't front run the vaults?
Yeah, great questions. So in terms of the fees, the famous 80-20 model in like traditional finance, we're doing something very similar. So right now, the actual protocol, it only takes a small fee on profitable vaults. That's just what we're using early on because we think it's like less invasive and like less friction. So right now, for every profitable vault, the investors get back 80, like obviously they get back their investment and they get back 80% of the profits. The manager gets 15% of the profits and the protocol gets 5% of the profits. So pretty straightforward. And we don't charge any management fees or anything like that. And in terms of front running, so for now we're for the foreseeable future, we're going to be focused on kind of like top 10, top 15 assets in crypto. And we think that because like the high volume and high liquidity there, combined with the fact that we're still starting with small vaults and we're only going to increase the maximum capacities relatively gradually, the front running isn't really going to be an issue for now. Like if you're doing an Ethereum or a Solana long or an Avalanche short or whatever, I don't think that people are going to go out of their way to make $100,000 STV and then like use that as exit liquidity or whatever. Now, it does become a bigger problem if you're looking at the far tail end of a BSC shitcoin or some unknown name on Uniswap, obviously. But we're going to be extremely slow and conservative with the assets we add. And it's definitely going to go from biggest to lowest. So we don't think like this illiquidity games or front running, we don't think it's going to be a big issue for now. And also, every single manager, they will have to earn the right to raise a lot of money. So on our platform, we're currently working on an algorithm where the maximum capacity and the reputation, it's actually the same thing. So if a manager has a reputation of 180,000, that means that he can raise 180,000 USDC for his vault, right? And vice versa. And the way it works is it's flexible. So if you earn money for the world, your max capacity expands. And if you go on a losing streak, it shrinks, right? And everything is 100% transparent. Literally every single move that a manager or investor takes, it's on chain. And we're going to be running increasingly extensive analytics on people's profiles, people's achievements, how they perform on shorts, how they perform on longs. Are they a better Bitcoin trader? Are a better Ethereum trader, etc., etc. So we have like a long roadmap for the analytics as well.
Cool. What else is in the roadmap?
So at the moment, we pretty much have like one integration aka GMX1 Arbitrum. We have one instrument type, which is leveraged futures, which I actually think is the most important one because that's like where most of the volume is. And we have like one chain, which is Arbitrum, right? We're already working on what we call STFX 2.0, which we're hoping to launch very, very early in 2023. And that's going to be like more multi-investment type, more multi-chain, multi-platform, and there's going to be a lot more customizability for the managers to create like more complex vaults.
Very cool.
Essentially, like we're starting off right now with leveraged perpetual futures trading simply because it's the most popular product in crypto in terms of volume, in terms of liquidity, etc. We think that if we find product market fit there, we can then horizontally expand to spot, options, even NFT trading, right? Whether it's NFT perpetuals or actual NFT themselves. Essentially, everything that's executable on chain. And I believe that the variety of instruments is going to keep expanding in the DeFi world. We can package it into this single trade vault. And our goal is to grow together with the DeFi space as a whole. I think that the amount of DEXs and DDEXs that are being built kind of in the shadows right now is also pretty large. And so we pretty much want to integrate on a bunch of chains, a bunch of dApps, a bunch of assets, etc. We want the STVs to be like extremely customizable, essentially.
So it's this social trading layer on top of DeFi and makes
exactly.
really puts like, they say like, oh, crypto's a game, like it's this large like multiplayer online universe, and like this actually like puts it in a formalized way on chain. I think that's really cool.
Exactly. We're trying to turn it into transparent championship.
Yeah. I was gonna ask, so like, say SocialFi, and obviously like social is a huge part of crypto. Like I'm sure like we all like live on Twitter, or at least you used to. But how would you describe like how social media in crypto and like the places where people gather have changed, and things that you observed from like Bitcoin Talk and Reddit from last cycle, now like crypto Twitter is like has become the main arena?
Yeah. So I think in general, people have moved away from like Reddit, 4chan, and even Bitcoin Talk and these other platforms. And crypto Twitter is definitely becoming the de facto place where the discussions happen. Back in 2018, it was like Bitcoin, Ethereum, and like 5 or 6 altcoins that were like the main camps. But crypto Twitter has become a much bigger world since. Now you have the NFT world, you have the DeFi world, you have the like Bitcoin Maxi world, you have the more kind of like technical MEV or developer world, etc. Right? And so it's like splintered into these like 6 or 7 sub communities. Like I've already said, I actually think, like whether we like it or not, I actually think NFTs have brought more people into crypto than even DeFi has, simply because it's like easier to relate to. And that's totally fine. But I still think DeFi is in the early innings of its potential. And today, in this bear market, it might appear that DeFi has pretty much like collapsed and died completely. But I will believe that it will have a resurgence again. And it will have 4 or 5 resurgences again, right? And because I think that essentially more and more of the system will keep flowing into DeFi. And in the grand scheme of things, and like the world economy is like half a quadrillion or something, right? And so in the grand scheme of things, DeFi is still like literally like a tiny baby. It hasn't even crawled out of its egg yet. So we still have a lot of growth potential ahead, in my opinion.
Yeah, I agree with that.
Can I ask one more thing about like, okay, so since we're all kind of like people who've been around here for several years, right? And Brad, you went through like the whole 17, 18 cycle thing. Knowing what we know about DeFi now, right? Did Bitcoiners make the right decision in leaving Bitcoin the way it is? Or if you had to go back, right? Back to 2016, 2017 and try to shift people's views, like would you actually try to shift people's views into changing Bitcoin to try to accept some version of DeFi for it? Or was it always the case that Bitcoin was just after the split, the Bitcoin Cash, Bitcoin split, that it was always just going to be like this, and that it was up to these other L1s like ETH and Solana and whatever to take the mantle of DeFi and run with it?
So that's a great question, and I think the answer is twofold. I think the current reality of 2022, 2023, it's proving the following. It's proving that dApps and like non-money use cases are actually important, because like people think in a vacuum. They say, oh, like gambling is not important, exchange is not important, NFTs are not important, DAOs are not important. But as a standalone sentence, it might be true, like I said, but when you put all these use cases together, it's like a whole new economy. It's like a whole new world. And as a whole, it produces a massive amount of fee revenue, medium of fee activity, medium of exchange activity, transfer activity, on-chain activity, volume activity, etc. Right? And I think Ethereum has proven that dApps and smart contracts and these like non-money use cases are very important. Obviously, like the biggest problem of Bitcoin, and it's an amazing money, I think, but the biggest problem is that you pretty much buy it and that's it. You know, you pretty much buy it and store it in cold storage and you don't do anything else with it. Now, there's actually like a relatively smaller world of Bitcoin DeFi that's emerging right now. And it's actually kind of cool because some of my friends in Chicago are building like leveraged perpetual trading on Lightning Network and a couple of other cool things like that, right? Debt markets, AMMs, etc. on Bitcoin. But obviously Bitcoin is like 6 years late to this, right? And I think Bitcoiners are starting to understand that these use cases are important, as well as the fact that like the medium of exchange use case that you alluded to is also very important. So that's kind of like the conclusions of the last 5 years, right? It's bad when
I was just going to say, like the splinter between Bitcoin Cash and Bitcoin, it was necessary, right? Like Bitcoin had to solidify into what it did, but at the same time, I also think that it left a lot of it created divisions within the community and kind of like put blinders on, right, to other things that could have been integrated into Bitcoin at the time, right? Had that split not had happened in the way it had been, like if it hadn't been so contentious, right? If it hadn't have like consumed the entire Bitcoin community for years, right? Because it wasn't just like a short process, right? I mean, this was like a multi-year process leading up to the split. I think if it hadn't been so contentious, maybe some of these things would have been integrated in. Like there would have been more openness for integrating OP return or like different opcodes into the Bitcoin system that would have allowed for people to build on top of it in an easier manner. And that people are just coming around now to saying, okay, well, let's try to do that. Let's think about what we can integrate in the longer term. And now they're having to have those discussions within the Bitcoin community at this point. So I don't know. I mean, look, I think Bitcoin does what it does like perfectly, right? It's a proof of work system that is, does one thing, which is create uncensorable money, right? And by choosing that, they've allowed other networks like Ethereum and Solana to do like other stuff. And it's not saying that they're wrong, or they're just different, right? It's just different. They're just doing different things.
Yeah, you know how they say that like the victors write history, right? And so it's very easy for the purpose of a blog article or like a Bitcoin history lesson to promote the events of 2017, like BTC versus Bitcoin Cash events, as like an ideological thing, or a big block, small block thing, or like a medium of exchange versus store of value thing. But in reality, it was like a political battle, right? And there were certain individuals on one side and certain individuals on the other. And the small block kind of Bitcoin core side has proven to be more powerful, right? That's just simply what has happened. That being said, I do think that Ethereum and what it has achieved kind of proved some bits and pieces of the Bitcoin Cash theory correct, in the sense that money kind of needs to move around to grow. And the reason I say that is because if for a second we entertain the idea that Bitcoin and Ethereum are both corporations or startups, and they all have their own growth and marketing techniques, Bitcoin is kind of running into the situation where, let's say you're a Bitcoin evangelist and you have to convince other people to buy your asset, right? You have to go to these people and appeal to these like libertarians and anti-central bankers and gold bugs. And you have to be like, look, like these guys are evil. They're printing the money. We need the hard money. You can only go so far with this. Most people don't give a shit about this stuff. The Ethereum it's smart because you got the NFT trading card people involved. You got the gamblers involved. There's going to be a bunch of sports betting dexes, I think, coming up in the next 2-3 years. That is going to bring another 2 million people. You got the traders in, and it appeals. The use cases appeal to a wider crowd. None of these people that I mentioned give a shit about inflation or disinflation or central banking. They just want something fun to do on the internet without other people telling them whether they can do it or not, right? And yeah, I mean, if we just like forget about all the purity and the philosophy and the political ideology, use cases help the asset to grow. That's I think what we're seeing right now.
Yeah, you need something to fuel the velocity of money. It can't just be stagnant. It can't just exist to exist. Like, you need actual use cases for it, and that's what Ethereum has done so well.
If you compare Bitcoin to Ethereum just on monetary properties alone, Ethereum might actually be slightly worse. And proof of stake might actually be slightly worse if you only compare it from a monetary point of view. But the velocity of money and the dApps and the use cases make up for it. It's a multi-dimensional battle. It's not so black and white.
Yeah, you have to like sacrifice a little bit of this like one aspect monetarily for it to be better in this other for like actual real world uses.
Yeah, and I think that Bitcoin might have gone too far in one side, and then like the Solana and others might have gone too far on the other side. And Ethereum is like this kind of somewhere in between that can make both work, you know?
Oh yeah, for sure. I was gonna ask you, like, now since you're building STFX, what's it like building a project, being on the other side instead of just trading it? What's the experience like? Is there some things you didn't expect becoming a builder?
Yeah, so building, I think, is less anxiety than trading because it's more of a long-term process. I do think that you can think of trading and you can treat every trade almost like a very small startup or a very small research project. But ultimately, if you're doing well, what the visual output that your brain sees is just a larger number at the bottom of an Excel spreadsheet, right? And when you're building, the positive outcome is like 1,000, 10,000 people using something you've created. And I think there's a certain sense of fulfillment to the latter. So I think building is more fulfilling than trading. But it takes like a different neurochemistry to do it. Different types of personalities do one thing better or the other. I have enjoyed both. I do still continue to trade, just not as much as I have in the past, and a little bit more medium term rather than short term. But building is just like super exciting because you get to assemble a team and do partnerships and try to grow the community. And there's a certain sense of a journey, a certain sense of like an ongoing party, an ongoing excitement, and it's very cool. And also, I think like building is kind of cool because you get to like think in your own head that you're contributing to this like growing new financial economy, new world, and yeah, it's just very cool. But I plan on continuing to trade as well. I see no reason why somebody doesn't have to do both. But I think during certain times in your youth, you kind of have to go all in one or the other. And for now, for me, that's like STFX and just building.
Yeah. Murad, can I ask one more thing? What is the neurochemistry that goes into being a builder and the neurochemistry that goes to being a trader? Like, what do you see like necessary for each one?
Yeah, I think that traders, they're really good at understanding the flows and the rumors and before they manifest and what the large how trading is essentially about trying to predict what like large players and large stakeholders and the true movers and shakers are going to do after like new events continuously like pop up on the timeline, right? And they're much better at like predicting the flow of the macro economy, right? And I think building is more about the psychology of building is essentially like an extension of entrepreneurship, just in a decentralized world for us. And I think entrepreneurship is about it's even more about human psychology than it is about engineering. And I think a good product is something that solves a problem for a person, or at least does something like at least 7 or 8x better, cheaper, faster, or something. And I think building is about understanding humans and understanding what kind of anxieties and frustrations and hopes that they have, and building a product that it plugs some of those holes. And so you need empathy. And so as a trader, you need to be a bit more of a mercenary. You need to be like faster, richer, or somehow better. And I think when you're building, you need to like understand like the human problems, and that's like the core difference.
I think like being a trader is more PvP, while being a builder is more PvE. Like that's the main. It's two different games.
I tend to agree with that.
Yeah.
Yeah. I would also say that like trading is even negative PvP, even because like the exchanges, they win no matter what, right?
That house always wins.
Yeah, exactly. But yes, I do think that building is a little bit more positive sum for sure.
I just wanted to jump in and ask Murad, like, you're in a very unique position because your product you're building, you could actually be a trader still and start putting up your strategies in these, right? Now, are your trading strategies available publicly for me to daisy chain? I'm asking for a friend, of course.
Yeah, I know the Taleb in his book, he like said that if you cut someone's hair, or even if you are literally the single best neurosurgeon in the world, right? You can only do so many surgeries per day, let's say 3 or 4 or whatever. But he said like there's 2 industries in the world where what's called your time leverage is like pretty much infinite, and that's technology and finance. And I really like DeFi because it's like both. So it can be even crazier, right, in that sense. But to answer your question, I will definitely be putting up some of my own vaults. And we're actually running a competition right now with $100,000 in prizes. And in the first couple of weeks, I've been putting up my own vaults as well. So yeah, I definitely plan on doing that.
Just ape into Murad.
Yeah, it's ape into Murad. And you said earlier you had 2,000 users. Are these like 2,000 managers, or are they kind of a blend of both users and managers?
There's more investors than managers, and that's pretty much what we expected to happen. But in our platform, and I think there's very interesting, like on our platform, any MetaMask wallet can be either an investor or a manager or both. There's nothing you can literally do both at any time, right? And your profile will kind of be split in half and will show your statistics as an investor and show your statistics as a manager. So anybody can play either one of the roles or both simultaneously. What we really like about our platform is that most of the vaults platforms in DeFi right now, it's pretty much like Team or the DAO whitelisting like 10 or 12 like yield generation strategies, and then you go on their website and it's like those 10 and 12 things, right? We have created a platform which is completely permissionless. So we think we're going to have tens of thousands of vaults because anybody can literally go and create them. And we are not aiming for our vaults to last months. Like I said, we're shooting for somewhere between 2 days and 2 weeks. That's kind of like the time frame where we're shooting for. And we think that because it's permissionless and anybody can come and make money, you're going to see a whole variety of vaults. And that's what we're trying to give people the tools, and we think they're going to create a bunch of different things.
Speaking of mercenaries and exchanges, we are currently seeing a battle for the ages right now between CZ and SPF happening in front of us. What's your take on this like whole situation of like Alameda FTX insolvency, and then CZ going in with the dump, and then like trying to fight the FUD, and everybody's like pulling out of the exchanges. It's pretty wild right now. But what do you think about all this?
I don't wanna say anything I'll regret because I use both exchanges extensively in my day to day.
Understood.
As do a lot of founders. But what I will say is, I think that certain participants in this battle of the titans, so to speak, they are more ideologically aligned with the original ideological, philosophical, and political beliefs of the early creators of the crypto space. That is to say, they are definitely more sort of anarcho-capitalist and libertarian and like CryptoPunk or cypherpunk, if you will, than others. And I think trying to do regulatory capture in the United States to try to fuck your competitors is a bit fucked up. That's what I'll say on the issue. And also trying to regulate DeFi front ends, even if it's only on the USA IP side, is also a bit fucked up. And that both of those things go against what I believe in, and I strongly disagree with it. And yeah, that's kind of I want to say a lot more, but I just don't want to say things that I'll regret. But that's kind of if I was politically correct, that's what I would say.
Yeah, we get the gist of it.
Yeah, we got it.
Yeah, and we've talked about this before in previous episodes as well.
Yeah, exactly.
So in terms of like the U.S. regulatory environment, something that has been said a lot in the past is the split that's going to happen between RegFi and DarkFi, or like even more so, U.S. DeFi and then world DeFi. Like, do you think that split's actually going to happen, and like Americans are just going to be trapped in this like little bubble while like the rest of the world can like enjoy DeFi more fully? Or do you think like it's going to have to be like we're going to have to like actually I'll let you answer the question.
No, I don't think the split happens. And if it does, then the American side is just going to lose. I mean, Americans are very, very wealthy people and a very, very wealthy empire, but the rest of the world combined is still a bigger market, right? And if America like over-regulates crypto too much, then they're going to just shoot themselves in the foot. The fundamental problem in American politics and global politics in general is that like there's 80-year-olds in power and they have no clue about what the 20-year-olds are building, and it's kind of messed up. So they're out of touch. But my fundamental belief, and even though there might be some bumps on the road, my fundamental philosophical belief is that technology moves faster than law. So I think we're going to be completely fine. Yeah. That's what I think.
Yeah, understood. Yeah, I feel like if the U.S. plays their cards too early, then like and that value is just going to go abroad, and you've already seen that with like a lot of founders, being based outside the U.S. And you can even argue that like a lot of the innovation will happen in developing countries because those are the places that actually like need DeFi and need more inflation hedges than like in the U.S. where people are in the West where people are already comfortable. Like there's less of a need for DeFi, but more so for like just straight up gambling. Maybe not a need for it, but like yeah.
And I think that like we're gonna reach a point where there's going to be simply more DeFi builders, operators, and participants than there are American politicians or even American soldiers or whatever. You can't catch them all. You can't get them all. It's just there's not enough human labor to catch every decentralized builder. So, I mean, the internet, IPs, VPNs, all of that infrastructure will get progressively more decentralized as well. And yeah, it's like the 20, 25-year-olds building this stuff, they will always stay a couple of steps ahead of the regulators. And beyond all of these discussions, there's two more things we need to understand. First of all, the BTC and ETH holders and the biggest American corporate crypto holders in the United States, they are becoming very wealthy, and they have like senators and House representatives and lobbyists of their own. So honestly, regulation might not even be that bad. Second of all, there's also going to be senators themselves that kind of play to like pretend to be decentralized and support the crypto industry, whatever. So it's a chaotic world. We know for a fact that there are American politicians and global politicians really whose families, kids, wives own BTC and ETH themselves. So it's not so black and white. It's not so black and white. A White House against blockchain. No, it's not like that. You need to understand that every political entity and every political ministry or whatever, it's an institution, but every institution is also composed of 1,000 individuals. And each of these individuals have their own greed, have their own hopes, dreams, anxieties, kids, etc. And I think the crypto space will be completely fine. I do think that either in the next cycle or the cycle after that, there will be a point in history where they will try to attack crypto and DeFi and all of this stuff quite harshly. So that needs to be prepared for sure. Because I think right now, most of the politicians in America still think that crypto is just a bunch of random Pokemon coins that teenagers buy weed on the internet with. But and so they don't think of it as a threat. But there will be a point in 1 or 2 cycles from now where it will appear like a threat. And they will try to scramble to attack it. Obviously, the fiat gateways being the weakest choke point. It's fine that I'm saying this out loud because it's public knowledge. And so they will try to attack those or whatever. But ultimately, and that will probably make that particular bear market of those years worse. But ultimately, we will survive. And that's what I believe in. Just build DeFi infrastructure and the gateways that is decentralized. That's it.
Amen to that. I think we're about to wrap up soon and we can go into our lightning round. What do you think, Kiet?
Yeah, I think that was the perfect point to end at. It was hopeful, and there's a little dash of excitement there for the future.
I really do appreciate your optimism, Murad, because like a lot of people, especially in the US, are pessimistic about like regulation and whatnot. But like I think I really align with your philosophy of like the world is going to be on chain. It's just a matter of how we're going to get there.
Yeah, I mean, I've realized that when I was like 23 or 24 that first of all, we live in a world of optimists and we live in a world of extroverts. And I think just relatively speaking, it's more advantageous to try to cultivate those types of like mindsets, frameworks, and beliefs. Because as a whole, over the long term, the world is growing. So we are approaching an age of abundance. And there's so many things to build, explore, solve. If you keep a positive mindset, you can succeed in any endeavor.
Amen.
Love that. I love that. All right, Murad. So at the end of these pods, we usually have a series of lightning questions. So I'm going to throw the first one at you. When did you first touch the chain and sexes don't count? What was the first thing you did on a blockchain? Doesn't have to be ETH or Bitcoin.
It was 2013.
What did you do?
So I bought a couple of BTC, like just P2P.
Like localbitcoin.com?
Something like that, yeah. I also did something else, but I'm not going to talk about it.
Got it. All right. Second question. I mean, maybe this is related to the second question, but what is your favorite off-chain activity? What is your favorite touch grass activity, hobbies?
You mean that have nothing to do with crypto?
Yeah. Hobbies, interests, something.
So I really like running. I'm actually training for a marathon right now. It puts me in a very meditative state. I'm very interested in Buddhism and none of the esoteric or mystical aspects of it, but the more practical ones. I think meditation and prayer are fundamentally probably the same thing at a chemical level, and I think you can put yourself in meditative states that feel better than drugs or sex. It does require a lot of practice, but it is possible, and I think it's underexplored. And yeah, I also really like reading about two topics, kind of like futurism and science and AI and AGI, and I also like general like personal development and self-improvement. So these, and I also really like cooking. So these are like kind of like my favorite activities right now.
Cool.
Cool. What's some advice you would give to your younger self 5 years ago?
My younger self 5 years ago, use less leverage, and also try to think for the long try to think for the long term, and uh, I think the biggest competitive advantage of our age for anybody is how well you manipulate technology, and so this is probably going to offend a lot of people, but I do think that STEM is more important than humanities for our future, and start learning to code earlier.
As a word cell, I am hurt. I'm just kidding. I'm just kidding.
I'm a word cell myself, so that's fine.
Yeah.
And then for me, last question is, if you weren't in crypto or finance, what would your professional career be?
Like something to do with AI or just like traditional tech, probably.
Okay.
Either that or either that or like psychology or sociology or something like that.
Very cool. Very cool. We've had, neuroscience as an answer. We had a
Yes.
world travel blogger as an answer
We had
on the show
Yes.
energy.
before.
Yeah, I think the world needs to like 100x our investment into cognitive neuroscience research, because I believe that understanding the brain is the key to literally like solving every problem, like colonizing space, immortality, curing cancer, etc.
Wow. So hopeful. I love it. I hope I live long enough to see all of it.
I really my biggest fear is that our generation is that my biggest fear is that our generation is that generation that teenagers in the 24th century will be laughing at as the last unlucky generation, where after we die and then they create immortality like a couple of years after we die. That will be very sad. So I'm really
The biggest rug.
yeah, exactly. I'm really hoping that there will be like a chain of breakthroughs, at least when we are 50 or 60, so that we can at least preserve the digital versions of our consciousness. That's what I'm praying for. Because if we just die like that, that's gonna be very sad. I hope to live 400, 500 years at least.
And on that note, Dave, you want to sign us out?
Yeah. Thanks so much, Murad, for coming on. This has been super informative podcast in every way, and it's been great to like one thing to read your worldview, but it's like really a treat to hear your worldview.
Yeah, for sure, man. Super. Thank you to you guys for inviting me. That was a very pleasant conversation, and yeah, maybe I'll come again sometime in the future.
Yeah, we'll get Peach on with you
Absolutely.
too.
For sure, for sure. Let's do
Yeah,
it.
Thanks, man. Appreciate
thanks.
it.
For sure.
Thank you, everyone, for watching this edition of Flywheel Pod, where we had Must Stop Murad, and we covered literally everything. We covered philosophy, trading, building, money, stablecoins, volatile assets, where the future of crypto and the world is heading. This was a real treat, honestly, and really enjoyed this one. Any final thoughts?
I think for me, like his final full adoption of crypto is when the market just rips straight upward and becomes
Yeah.
up only, is when crypto becomes mainstream. I sure
Yeah.
hope that happens.
I thought it was, I thought it was interesting when he said like he'll probably like there's basically like the fiat world and the crypto world. And at some cycle, whether it's the next one or 2 or 3 cycles from now, there's just going to be a switch. And it's going to turn into a crypto world over a fiat world.
And I'm like, that sounds violent. And
Yeah.
drastic,
I mean, that's what he was talking about. He was like, all like, monetary changes in monetary systems have, for the most part, been chaotic, to say the least. Yeah. Sam, do you have any final thoughts?
I disagree. I don't think it's the case. I think like when you look at fiat, it's designed to be a liability, right? So, and Bitcoin is a collateral, right? So it's two different things. So it's just trying to address two different things. I'm on the view that they go hand in hand. I'm all for hyper Bitcoin dollarization, where like the higher the Bitcoin goes, the more dollars that can be created through debt, and then that drives the Bitcoin price higher, and then there's more dollars that can be created. So like, I think he thinks of it as this like zero sum winner take all thing. But on the other hand, I think it just goes hand in hand. Like we want a good debt asset and we want a good collateral asset. And that's where both Bitcoin and the dollar, because the dollar is like really nebulous about what it is. If you think of it more as like Bitcoin's the best asset that you can hold as collateral versus the dollar, which is the best debt asset, right? So they go hand in hand. I don't think there's really any sort of PvP. It's a one makes the other better, right? You can't have Bitcoin without having dollars, and dollars can't have dollars. Well, I mean, I guess you had Bitcoin without dollars, but just like Bitcoin needs dollars to drive debt and drive leverage, which is essential for the crypto markets.
There's enough room in the pie for everyone.
Oh yeah.
Yeah. And on that note, if you like this episode, give us a like, let us know in the comments, hit that bell button, subscribe. Don't forget to follow us on Twitter at FlywheelPod. Join our Telegram at FlywheelPod. You can follow me on Twitter at DeFi Dave 22.
You can follow me at 0xcapital_K.
And I'm at traders_insight.
And we'll see you next week.
Peace.